maybe we can just go down and talk about what your first experience was raising money, and what was that first seed? What was your very first angel investor or VC meeting like?
Sure. All right, I'll start it off. So my name's Jessica. I run a company called inDinero, and we started back when I was in college. And we were founded in '09, so people weren't really that open to giving money. And we hadn't raised money before. It was our first company we really seriously built. And I just remember it was just really hard to get money back then. Eric, I tried to pitch you, you said no. Yes, later on he ended up investing, but yeah, it was just really rough for us that summer. But then we did Y Combinator, and then after that, things kind of squared themselves away. But we've since raised roughly 3.5, almost $4 million now, and it's from angel investors, institutionals, pretty much the full spectrum.
So our first angel experience at SendHub was actually relatively easy in comparison. I knew Howard Lindzon from Social Leverage personally, and I sent him a deck, and he said, "I'm not looking at this deck, but I'm going to give you 25 grand because I like you. Don't make me regret it." So that was fine. That was fine. And then we subsequently got into YC a couple of months after that, which made things a good deal easier because of the start fund money. We were, at the time, running SendHub on our credit cards. SendHub does business phone systems, so there's an underlying cost of telecoms, text messages, voice minutes. After YC and the demo day scrum, we were actually in a pretty bad situation. We only had about 8 investors that were interested in us via YC's online voting system. Most companies had 30 to 50, so we were pretty screwed, we thought. So we basically had to work the room as hard as we could that day, get as many business cards as we could, and then just hit the inboxes as hard as we could. And that worked out. We raised $2 million in 2 weeks out of YC. And then in the most recent round, we just did our A in the last month. That was also a disaster. So we probably spoke to about 70 VCs and about 50 angels during that process that said no. And then we have 3 or 4 VCs that said yes during that process, and about 50 angels. And we probably raised about $2 million total from crowdfunding in the end. We've raised about 5.5 now.
Our first experience, I think, fundraising was our first kind of like point of contact with the professional investment community was actually through First Round Capital's office hours. It's actually something that they've, I think, deprecated since then. But my co-founder and I actually, TalentBin is a pivot out of a prior thesis called honestly.com. Essentially, it was a Yelp for business professionals, so community contributed reviews of individual professionals, kind of like TripAdvisor or Amazon product reviews. And so our first interaction with First Round Capital was kind of like a first touch point where we talked about that. Later on, when we launched about 6 months later, it became this massive shit show controversy that was covered by the Today Show and pretty much everyone. And that was kind of the point at which there was another kind of interface with the professional investment community. At the same time, we had been raising a note among kind of like friends and family. This was 2010, so it was before kind of the rise of like AngelList or FundersClub, or kind of like where you had good distribution to pools of capital, right? It was all very manually done. And First Round Capital ended up leading our initial seed round largely on the hypothesis that professional reputation or kind of like presence in the world was kind of a broken thing. And that honestly.com may or may not have actually been the right kind of attempt at that, the right shot on goal, but that the problem space was very rich. So Josh Kopelman led that, and we're kind of off to the races from there. But that was the first experience.
Totally. Well, so sounds like plenty of stories. I guess, right at that moment where you don't have any space anymore, how do you decide, what are the criteria, right? I mean, when you're raising around, things tend to go from they really don't want you to them really wanting you, investors not wanting you and then really wanting you at some point. At the moment where you have leverage, what do you look for? What are the characteristics of investors that you use to say, I'm going to give an allocation here and I'm not going to give to this other person?
Sure. So I think that decision has been relatively rare for us, I confess. So
sounds like a pretty good problem to have.
Exactly right.
It's a good problem.
So usually, if the money is green, is one of the primary differentiators.
Correct.
And whether or not somebody is like, usually you can tell pretty early on in the process when you're talking to someone if they're going to be a problematic investor. And we have one or two of those, and they are delightful. But ordinarily, what you're looking for is someone that can, I guess, get as close to a guarantee on solving a pain point for you as possible. So, we work in telecom. Somebody that has a great knowledge of telecoms, has worked in there, solved the problem would be a great example for us. Or someone that has a connection to a set of hiring leads that would be particularly important to us, or a particular partnership. I try and drill in as much as I can to figure out whether or not that value is just ephemeral. It's like, oh, well, I've got lots of connections in this space, which is what everybody says, versus what would actually be the result of that interaction.
The value add, for sure.
Yeah, value add, but I'd say scratching the surface a little bit more and seeing how deep that value add goes, because everybody knows somebody at Google, but the question is whether or not they know the right person and whether or not that can actually change something for you.
Yeah, I think it kind of depends on, what do you look for an investor from a process standpoint? Like when you're in the middle of a fundraising process, and then there's what do you look for in an investor that's going to help you grow your company and grow your business. I think the process dynamics of fundraising can oftentimes be a total cluster. And so I think in those sort of situations, what you're looking for is somebody who actually has conviction and is ready to commit.
So time to the yes or no, or if you even can get to a yes or no.
Yeah, it's just so I run our sales organization, and so sales is a funnel-based exercise where you have to be parsimonious with your time. You have to spend good time with good people, and so just finding somebody who has conviction around what you're doing, right? So the example I would use here would be like the Josh Kopelman example around honestly.com, and is ready to throw down and take a stand there, versus kind of yes, I am very interested. However, I need to hear what everyone else has to say, and I'm going to be one of the penguins lined up at the edge of the iceberg and wait for somebody to jump in. So that's a process thing. I actually think that that's going to go away more and more as you have folks like FundersClub that have where the process is very smooth.
Why do you think they take time?
I'm sorry?
Why do some investors take time like that, where they're penguins who are just waiting to jump off?
Because they hate entrepreneurs. No, I have no, I have no idea. That's kind of a question. That'd be more of a question for you. What I do know is that people are going to have to get religion quickly, because folks like FundersClub will eat their lunch while they're waiting around. So I think finding those folks, that's the first, in terms of helpfulness, that's that. But I think that's actually kind of less helpful. That's more process dynamics and tactics.
Certainly.
And then from actually helping to build your business, I think it's an expertise. Their expertise should be stage appropriate. Yeah, green money is great. So in the case of us, honestly.com was the wrong shot on goal. And so having somebody who, an early stage seed investor like First Round Capital, to help you unscrew your thinking when your thinking is screwed, is very important. And also, a community where all solved problems are very easy for you to get access to. So which phone system should I use? Which payroll providers, rather than spending SendHub for your phone, obviously. Having a community where you can answer those questions quickly before your company dies.
What form does that take typically with good investors?
Well, First Round Capital does it in a very scalable way with an online community.
Right on.
So it's just very peer-to-peer.
Absolutely.
And so and then lastly, so now we're later stage, we have product market fit, and so there's less of a danger of us flying into the ocean before we figure it out. Now it's a question of how can we climb as quickly as possible, and so now we're working with Lightbank. They led our most recent round. It's the Groupon guys, they're just all about inside sales and sales automation and efficiency and things like that. So it's stage appropriate expertise.
So they put you in touch with experts at any time for the sales side.
Yeah, they've done it before.
Right.
I think a lot of it too is just moral support. I I feel like this is just completely under talked about. We think about
That's a good point.
value add and how reputable are they, how much money do they have, what kind of connections they have. But
Therapist.
I think a lot of our best investors were the ones who were not necessarily the best known. They were just really supportive and helpful and just check in every 2 months and just say, hey, how's it going? How could I help? And you kind of just know they're around for me. And you think, wow, like if I start a new company, I could call this person and I would love to work with them again. And we have a few dozen investors, and I can only say that about a handful of them. And I love all of them who do. It just feels so nice.
Yeah, that's certainly been our experience. So we've had some pretty testing times in the last few months, and I think that Garry and I probably talk every week or something about some issue that we're dealing with that feels like it's the end. It turns out it's just today. And then there are 3 or 4 angel investors of very low dollar value that we had in our seed round who have invested hundreds of hours with me over the last 12 months, 18 months, going through process ideas, talking about vision stuff, helping with hiring leads, and also mothering us through real crisis. And that makes a huge difference. Like, my allegiance to those people is extremely strong, and I would always go to them first. But I don't think that they can have too many of those kinds of people in their lives. I mean, I definitely have been to your house more than once, Garry, and I don't know how many people want that. Addresses later. So I think it's a fine balance. I think that there's plenty of room in a round for people who are putting money in. There's plenty of room for people with particular expertise, and then there's room for people who are going to be your solid mentors. And I certainly have that as a requirement for our fundraising. If you want to be a mentor to one of our founders or one of our leads in some way because you want to invest a bunch of time, then I think that you should also put your money where your mouth is as well. I think the worst thing you can say to a founder is, hey, I'm a little bit worried about the business, so I'm not going to give you any money, but I'd love to be one of your advisors. Like, you're not going to get a reply to that email. If you do, there's a lot of things that have been said before that email was typed.
I mean, let's see. So we've talked a lot about what great behavior and what great investors, how great investors act. What about, you don't have to name any names. In fact, please don't. But in terms of investors who have annoyed you, who have done things that haven't been helpful to the business, like, what are some things like that, and how do you deal with that?
I have nothing to say here.
Well, we certainly have, I think delay is actually the key issue. So I think that if you take a meeting with an entrepreneur, like an hour meeting, and you're talking about the business and they share a deck or whatever, I think you probably owe them a polite no. You can write that email in less than 30 seconds, you can create a template, you can hit send. And that's a very easy thing to do. They're probably going to follow it with you 4 or 5 times if you don't. So it's going to save you more time to do that. Having spoken to almost every VC in the Valley this year, I can say that probably only about 80% of them behave that way, and that's disappointing.
Under.
Sure. Yeah, well, I'm being generous. Maybe just the ones we spoke to. The others were conflicted out. And then another key behavior that's negative is going a little bit further and saying that you're interested, but hanging on for months. So we've had 3 or 4 instances of that, including people that were in our seed round, who almost caused real trouble for the company. In fact, if Boris hadn't pulled the trigger on FundersClub for us, we would have been in serious dire straits because a couple of our seed investors waited and waited and waited before they gave us a no on whether or not they were going to help us out in a time of need. If they'd given us that no 3 months before, we would have been in a much better position because we would have been able to plan. I think that it's underestimated how much of an impact your absence of a response can have.
If it's a no, how important is it to find out why that no is?
So I think the common, theory around that is you believe the no but not the why. I'm honestly I've subscribed to that policy, so I'm not concerned about getting a full paragraph on feedback. You're probably going to say not far enough along, too far along, too much competition, or not defensible. That's my guess. So yes, I've got answers for all of those questions. Obviously, we're trying to build a business around it. Your feedback, if you want to invest time in the product, is extremely valuable. But otherwise, I'm fine just getting a polite no, like we have to evaluate deals in a relative context. You guys didn't win this time. We'd love to see you at the next round.
Yeah, I actually disagree with the feedback component simply because you're gonna take passes over many targets when you're fundraising. And so this is actually one of the things that's really cool about like FundersClub, for instance, is that you have an angel panel, right? Essentially you get like, it's like polling, 100 investors like instantaneously. And you can kind of get like a histogram of like FAQs. And so that's great because if your pitch is not correct or has bugs in it, right, you can tune it appropriately to allay those concerns, right, going forward.
Do you think you're going to get that from a Sand Hill Road VC?
I think you may, and with enough volume, with a high enough N, you'll start to see patterns there. The problem, I mean, this is why Bill Trenchard gave this really great talk at a First Round Capital CEO Summit about fundraising hacks. One of the things he talked about was front load your schedule and your fundraising process with people that like you wouldn't be brokenhearted if they said no, just so your pitch can get better and also you can start getting feedback and kind of tuning appropriately, right? Like in our case, it was something as stupid as like we had our monthly revenue, which was growing, but like we have a seasonality issue in human capital management has a tendency to be very Q4 loaded. And so we had a down month, right? Which is, guess what? November is a shorter month and everyone's on vacation. So of course you're gonna have lower bookings, right? And so if you just take that graph and you roll it up into quarterly, all of a sudden it looks beautiful, right? Like so something as stupid as that can be helpful. And then on the downside stuff, yeah, it's non-communication, right? We call it tire kicking in sales. It's just you're just consuming massive opportunity cost, and eventually it'll accrue to your reputation.
Makes sense. So we've heard a bunch about FundersClub. There are obviously lots of options out there too. How did you guys approach thinking about that when it came to starting to raise your rounds?
I thought it was a really cool concept. I'd already wrapped up most of my fundraising by that point, but I just ran into Alex and Boris and just thought it'd be really cool to give it a try. Why not? But yeah, I thought of it as I would have done it sooner, but the circumstances were simply that I had finished most of my fundraising by then.
Yeah, we started our A process with FundersClub, and it was a combination of proximity because of YC, and then also running into Boris and saying, hey, we're looking to do something like this, and starting the process. So I think that, and they were great about it. I think we were both one of the early ones, and so during that process there was an awful lot of feedback, a lot of talking backwards and forwards about aligning the pitch, etc. And that was extremely helpful. And so it was abundantly clear to us by the time we got to the stage that we wanted to actually run the campaign that this was a great idea because they demonstrated all the value.
FundersClub, I think we connected through the First Round Capital community. Extraordinarily helpful. We didn't start with FundersClub. So in our most recent round, Lightbank was leading the round. Paulie was joining the board, and they put in $1 million. There's $1 million of room, and so it was a question of kind of just rounding folks up in order to fill that out, which in and of itself is a process. And so one of the things that was really helpful was, again, this comes back to like process dynamics and like unfortunately having to try to foment fear of missing out. And so FundersClub was very low overhead, extremely low overhead, and essentially provided you access to all of these different private pools of capital all over the United States in such a way that like you could take a couple 100,000 of that. In our case, it was the demand was much higher than FundersClub was able to eventually place, and so that kind of keeps that momentum up. For filling out the rest of the round, because like there's a timeline, there's a ticking time bomb going off, so it's like, okay, you have to hop in. So FundersClub was really helpful for that, and I can imagine as their investor syndicate gets larger, taking that entire $1 million in the future.
we also did microventures and AngelList.
Right on.
So microventures was a very different experience because they simply weren't able to generate enough interest for us. And that caused a problem for us in terms of timing. And then, of course, all the crowdsourcing platforms don't really want you to be working with the other crowdsourcing platforms at the same time. So for us, with the amount of money that we needed in order to fill out our A, we had to be very careful about it. And so in the end, what we did was we ended up just taking money out of Microventures Fund. So they invested in us directly rather than their crowd doing so. And then with AngelList, we got, we did both the online fund and then also got, via our own connections, got to be featured on there. And that was huge. So the distribution element is key. I think one of the advantages of someone like FundersClub, basically, they're going to do a lot of the filtering up front for the company. And so you're going to find out whether or not you're going to get in and do well pretty early because they're unlikely to run a campaign that's going to fail. And you're going to get a lot of feedback if you're not going to get in. Whereas with AngelList, pretty much anyone can do it, but you're going to live and die by the sword. Like the crowd will either care or they won't, and then you're done. And so we got lucky there that we got featured, and then we generated some momentum. And I think that the other strategy of having a VC already in before you go to the crowd. So we did it before with FundersClub where we started, then we got a VC in our round, bullpen capital, and then went to AngelList to do the rest of the fundraising. And that was a much easier process after we had the VC in because we could name names and I used to work at Clout, so I'm familiar with how social media works, and we were able to generate enough buzz on that website to generate quite a bit of interest.
So going back to how, we've got a room full of both founders and investors. What did you guys do? Okay, round is closed the next day or month after. How did you guys deal with communication with your investors or, all of you have gotten a lot of help. How did you find out? Was it all ad hoc? Did you email them? Did you get on the phone? Or, what are the best things to do for founders to be able to work with their kind of seed round people?
I think face-to-face, there's no substitute for face-to-face meetings. And I'll send out emails to the whole investor group maybe once a quarter. And then I have a few questions and challenges and things I'd like help on. And almost no one replies to that. Just people don't want to reply to that. They assume, I guess, other people are probably replying. So if I actually need help on something, I set up an in-person meeting one-on-one with the people I actually want to get help from, and that helps a lot.
Yeah, we certainly do a lot of face-to-face meetings. I think that we do a monthly email to all of our investors because we have zillions, and some people get very upset if they haven't heard from us for more than 30 days. So that solves a lot of our problems in terms of the communication. We're upfront with people about that. So that's certainly helpful. But yeah, I think that face-to-face meetings are certainly helpful because just as humans, we're more naturally inclined to be helpful to people that we meet. And I think that the other aspect is you better be on email like you've never been on email. If somebody that you have been trying to get a meeting with finally emails you back, like you want to respond very, very quickly. So that is a key tenet of my day, is making sure that I am not missing any emails that are coming in from potential people, because that's saved us many, many times, because that's how you can get a quick conversation going. So in fact, there's an example this afternoon. So about a month and a half ago, there was a FundersClub dinner. Boris introduced me to a guy who'd raised a bunch of money in the past. I contacted that guy, didn't hear anything. Then finally got into a conversation with him. He gave me some great advice about announcing the round whilst there was still a bit of room left. And as a result of that, we now have a bunch of meetings this afternoon in order to fill out the rest of what we want to get for the A, even though that only came about as a result of me being super responsive on email. And so I try and use every tool that I have. Any lever that you have as a founder, you should engage with, regardless of how good you think it might be, to the point of efficiency, of course.
In terms of communicating with investors and both reporting out and also asking for help, I think it's probably stage dependent. I know that when we were earlier on and we weren't on the other side of product market fit, board meetings were super helpful for that. First Round Capital, of course, was on the board with us. We also had Sargar from Charles River Ventures was an observer, and he's been super helpful as well. And so having those at a reasonable tempo was always really helpful, because it's a forcing function. Like life intervenes, and sometimes you're not as good about driving your calendar as you should be. And so knowing that like every 8 or 10 weeks that you have this forcing function to like clear the air and kind of report out and like actually wrap your head around your business, from
So you would
looking
have
at it.
meetings like at
What's
your
that?
office every
Yeah.
10 weeks or so.
Yeah, we had maybe every 2 or 3 months, depending on like holidays and stuff like that. Yeah, we would have board meetings at First Round Capital's office in San Francisco, and largely. So there was another question on our list of questions was like, what was the best advice you ever got? Was,
Totally.
Over time you can see a trend. We're like, guys, this is not working. We're gonna give it another try. Okay, it's still not working. All right, one more try. It's still not working. Okay, now we're gonna pivot, right? And so that was like those things don't happen over email. They happen with a trend line, and those conversations don't necessarily happen over email. So and then when you get later stage, I think what that comes down to is having a strong understanding of what the key metrics are that drive your business. If you're an enterprise sales organization like TalentBin is, it's very clear what that is, and just having a dashboard for that, and that information gets promulgated on a bi-monthly basis.
So segueing into that, I mean, what are other great pieces of advice that you guys have gotten along the way?
So I think the best piece that I got actually was more sort of a comment. I remember when we were getting pretty close to the edge in about end of May, I got an email on it. So there's an advice list for Y Combinator. So you basically send like, help, we're in trouble, and then like Paul Graham asks you a question and really tone, and you're like, oh, I don't want to answer that question. And then like some of the people are like, oh, I really think you should answer that question. And at the end of that kind of stream of consciousness of like, this is what we think you should do, he just wrote me a personal note that said, I think that you're tough enough to get through this and that you'll ultimately be successful. And so I've read that email probably about 150 times in the last 4 or 5 months. And that was enormously important to me, that somebody who's seen enough patterns here has said that the primary factor, he says it all the time, is be tough. And he thinks that we are tough enough. So I was able to just go back every Monday to the team and be like, yeah, I know things suck right now and that we are under strain and we're losing people and all those kinds of things. But we're tough enough to get through this. And if I believed it, then they would probably believe it.
Yeah, I think those emails and words of encouragement are probably, for me at least, more helpful than any negative advice I've ever received. Mm-hmm. And yeah, like sometimes I'll go to an investor and complain about challenges, and then they'll just say, just like, this is nothing compared to what I'm seeing with some of my other companies, so I wouldn't lose sleep if I were you. And that just feels really good.
Yeah. All right. Let's open it up for some questions and answers right over here.
With prospective investors, sometimes you may have a perception gap on the valuation. The investor may perceive it much lower than what you were expecting. Can you share some experiences where the investor was proactive and found a good solution to bridge that perception gap?
Yeah, so about the whole pricing thing, I definitely have experienced a lot of pushback on price, but it's just like sales. People have an objection, and that just means you didn't sell them well enough on why your company is worth that. And so I think it's better not to talk about valuation up front. I think you should just talk about the company and then deal with that later. Wait, are you a founder or investor?
A good experience from the investor that you had.
A good experience?
Have you had an investor bridge that gap creatively?
Have you ever gotten someone over the hump on the valuation part?
Yeah, of course. In my rounds, typically when I had that, it's towards the end of the round. Like people who commit quickly think it's like they set the price, so obviously they think it's fair. So the problem for me tends to be at the end, and the way to bridge that is, I can't like lower a price for them. I can't accommodate them. I've already filled up pretty much the rest of the round. So at that point, it's really up to the entrepreneur to convince the investor, in my opinion. I don't know, do you have?
Yeah, so I think that the first and most important thing is that a valuation isn't a valuation until somebody that both sides agree on is the verisign of the valuation has already come in, right? Otherwise, it's absolutely a conversation, and both sides should be prepared for that. I think that the primary problem is that if you don't have that, then it's easy for the relationship to deteriorate into a negotiation. I think that's one of the last things that you want to start a relationship with. And so, we don't talk about timing with investors for that reason. I say I want you to take as much time as you need, and if the round is open, then so be it. If not, then no. And that actually seems to be more effective. I would say that in terms of creative solutions for that, a lot of things have been put in front of me. It usually involves getting a bunch of stock via the advisory board, which I think is a pretty dangerous game to play.
It's pretty dangerous.
I think that if people find out about that and they feel that they are equally valuable or even close to as valuable, then they're going to expect the same kind of treatment. I think that when you have somebody that has some kind of overwhelming value, like it's just obnoxiously clear and you're going to have to do whatever it takes, then move whatever it takes to get somebody in. But I think that if you are not that person, then asking that of a founder when there is already this sort of third-party agreement on what the valuation is a great way to make sure that you don't get in that round. And also, I would add that the math of this is pretty clear. Right? You guys are not investing in us to go from the difference between 5 and 6x. You're investing to find out whether it's binary. It's 1,000% increase or it's 0% increase, and it should be treated in that way. I know that there's a lot of talk about valuations and why, and the sort of ego that goes with them. But I think that goes both ways.
I mean, so Jessica was speaking about a post-term sheet. In my experience, pre-term sheet, valuation is pretty much determined by process dynamics. How many people, if you have a competitive process going on, then valuations can rise. The way that investors can surmount that, of course, is by being fast, right? And getting it done quickly. And what I've also seen is that it's usually less contingent on any sort of intrinsic value of the company, and instead a desire to own a certain amount of the organization, and a desire to put a certain amount of capital to work. And so I haven't had a ton of experience around, so typically that's less a question of bridging that gap, and more a question of this is how much these various pools of capital want to put to work in order to make their fund economics happen, and this is their desired ownership. And there's there's a bell curve there.
Yeah, well, I see what we're seeing is that, and this was a controversial practice, probably continues to be controversial, but is becoming more accepted, that early investors who are decisive, they get lower valuation caps. These are just notes.
Yeah, I agree with that. A lot of the people in our batch at YC did that to great effect.
They de-risk it.
Yeah, exactly. And so arguably, on the founder side, this is actually how it should go. It lets people basically get the first money in much quicker, and then it properly allows the people who are decisive to, receive a benefit from it. And so I think it's going to be a lot more common. It was very controversial, remains controversial, but I think it's here to stay.
I think you see this with the folks like FundersClub. You're also going to see modifications here as well, because they don't necessarily the disparate investors that FundersClub is kind of yoking together. They see kind of a valuation, and it's kind of a thumbs up, thumbs down, right? As opposed to well, actually, my fund needs, I need to own this amount of it. So I think that will be really interesting, because then you actually will be trying to do valuations of a private organization that is not predicated on the desire to put a certain amount of money to work.
Certainly.
And I don't know how that's going to play out. It's very different than the current dynamics.
Absolutely. Yes, sir.
Did you have worries about reputational risk if you did raise capital on a public forum?
Did or did not?
If you did not raise capital on a public forum or official risk, is that a concern?
So if it failed? No, my concern was if the business failed. So I was not concerned at all about whether or not my name or the company's name would be less impressive to people. I think optics are extremely important, as we've learned in the last 12 months.
Does that mean it was a fund of last resort then? Because
No. It certainly wasn't a fund of last resort. It was a combination of factors for us. I think that, like I said, we started with FundersClub. I was not intending to do AngelList. I wanted to do one platform, and it was risky for us because there are similar pools of people. So that in that regard, AngelList was a necessity FundersClub was a decision. And I think that on Sand Hill Road, it makes a big difference as to who's spoken to whom, because mostly what we're dealing with there is very fuzzy math and whether or not someone believes in a particular idea or a market. And so in that regard, then yes, I think that if you've been talking to people for 4 or 5 weeks and you've not gotten anywhere, then every associate on that road knows what you've been saying, why they passed, and they're telling everybody else because that's what their industry is doing. And so, yeah, you've got a very short period of time.
The reputational risk already exists, right? With the non-online versions.
Mm-hmm. Yeah, I agree.
And I think what's kind of interesting about that is, yeah, so that you already have to deal with that. Like you go out to you tranche it, right? You go out to a certain number of firms, to a certain number of funds, and you take those swings at the plate, but you don't actually want that. You kind of want to quarantine that because you don't want that to promulgate to everyone else, right? Which is just like, again, these like funny process dynamics, right? Rather than just like, here's the information in the world. Like the process on FundersClub is, here's the information in the world, here's a validated deck that has certain metrics in it, and then here's the story associated therewith. And here's the valuation, and people are either thumbs up or they're thumbs down. If everyone is thumbs down, perhaps the valuation's too high. It might not be that your story's incorrect. And so just having more information and more transparency will make it such that you have fewer startups that actually do have good hypotheses dying, right? Whereas right now what you have is fewer investments happening by those funds where they want to shove a ton of money into marginal hypotheses. And then you have a bunch of, well, not a bunch, but you certainly have entrepreneurs look around and they see kind of like The Walking Dead with like $30 million in their bank account and think about like, wow, how many hypotheses could have actually been funded with that? And instead it's just sitting there consuming real estate.
I think I saw over here.
Kind of coming off of what Peter was just talking about, and I know, Ash, you spoke about some of the challenges with raising money, but then we hear a lot about how much new money is chasing seed investments now. Do you feel like in general it's a seller's market, or is that not a fair characterization, that you guys have the leverage in negotiations right now and in raising money?
Do founders have leverage?
Yeah, I mean, we have some leverage, of course. It's entirely dependent on your desire. I think that the top companies always have high demand, and that creates press, and that press creates excitement, and excitement in either positive or negative manners changes valuations as a whole. I don't know if it's a buyer's or seller's market for us right now. I think that it's better than it was 9 months ago for sure, and you can see that just by the general stats about how much money is being put to work. I would say that in the seed round, you can find that momentum can carry you a lot further very quickly, as can having a reasonable background. One of my co-founders is a Rhodes Scholar and is African American and knew a lot of people in the Bay Area who were similar in terms of background, and that was enormously helpful. And so we got a little bit of momentum, and then he was able to collect money very, very quickly as a result of that. Similarly, if you happen to have a company that's been nominated for an award that everyone's going to read about on TechCrunch, then yeah, you're probably going to have a lot more people knocking on your door than otherwise. But the other aspect I would say is that there's dynamics that go backwards and forwards in terms of how you respond to that desire. Right? If you respond positively to every time a VC contacts you and says, hey, I'd love to talk, I've been tracking you guys for a while, then you're probably never going to get that VC. But you have to play hard to get, just in the same way as we do in a lot of other interactions.
Yeah, I mean, I agree, just really quickly. It really depends on the company. I have a bunch of friends who, they raise their rounds super fast, and some who struggle for months. And I mean, you can kind of tell up front based on everything you said, reputation, progress, revenue, whether you're a Rhodes Scholar, all of that matters a great deal. But yeah, it's completely different company to company.
I think it's super verticalized. Like, it's largely contingent on how aware of a market the demand side, in this case the investor community, is. Like, so for instance, TalentBin is in it's enterprise software, it's in recruiting, right? These are things that like finance people, especially on the recruiting and HR side, that finance and product and like technology people have a tendency to not know anything about. Kind of goes on over there, behind the curtain, which is funny because like it happens to be driving $30 billion of market cap for LinkedIn, for instance. But so you could say, oh, well, that's a seed company right there. Isn't that a seller's market? Well, no, because we're a substantially different type of seed company than, you know, a photo sharing app that, you know, takes a picture on the front and the back. So I don't think you can make.
Pretty cool app.
Yeah, clearly.
It's not Jerome's either.
I don't. Yeah. So I don't know if you can make a holistic. I think there's interesting stuff here. Like I know that there's a YC pivot called Mattermark that's kind of playing around with they're trying to be like the Bloomberg for private companies, right?
Danielle was just here.
Oh, she was?
Yep.
Great. So I think, like, again, theme of information transparency and kind of being able to like look at, so that's like the supply side, like being able to model the investment objects very well. And I think there's probably less transparency on the investment side. But I think it really depends. Like you can't just say like, oh, it's a seller's market.
All right. That's all we have time for today. Please give a round of applause to our speakers today.